You guys can hear him loud and clear, right? Sweet. All right. So without further ado, introducing Brady to the stream. We're gonna actually share his screen so he can show you guys a few things, and we can kind of just go through his processes and kind of do a background check on him, make sure he is who he says he is, right? Before we start and show your screen, Brady, I just want to start with kind of. There's a lot of people in the stream that are full time workers, okay, just like you, right? And they are trying to find themselves a way out of that full time job. They want to do something they love to do, they enjoy, maybe such as trading. It's just like they're looking for a different life, and they're in the spot where it's a little tough to just be like, hey, I want to quit my job. I'm going to be a full time trader. So, can you tell us a little bit about like your background and what you do? I know you do work full time, or maybe you don't anymore. I don't know. You could tell the stream that, but you want to go through that?
Yeah, no, absolutely. So I work in mergers and acquisitions. Another 2 days on the job, and then I'm kind of home free. If you saw the kind of pennies going raw kind of podcast, so I've been doing that for 7 years now. So it's been I'm 30 now, and yeah. So I mean, I've been doing that job and some tough hours in there, and I had to kind of put in extra time to study and kind of make my way through. In terms of transitioning, I didn't decide to quit my kind of full-time job until I built consistency. I maintain kind of a trading journal. How many trades I take, what I do wrong each day. I try to kind of incorporate the next day, so on and so forth. And yeah, no, I mean, it took me a while to get things to click, and I would say like 4 years actually. So I was profitable before, but not to the point where kind of last year where I could really kind of replicate the income I needed, right, to support myself. And so I wouldn't take any kind of big moves until you get there. And I can cover some of the educational kind of stuff that I like in my channel, as a kind of step by step process after that. So.
Fully agreed, man. I have kind of the same story where I worked, just as a full time, but I had to step down to part time and so forth that they know about. But it's really cool to see that some other people out there have put in so much time and effort, and they're finally seeing it pay off where they can take that step back and become a trader or do something else with their life besides the grind, the 9 to 5s that most people don't enjoy out there. They just kind of hate their life, but they have to put food on the table. They got to support their children, they gotta pay the bills, so to speak. So very excited to have you on for that. Another thing, I don't know if a lot of people watch this for PGIR. How many guys watch PGIR? You guys watch this interview? Type one. I'm just curious. I mean, a lot of the stuff that we're going over, maybe you already heard before, so we'll kind of try to change it up a little bit. But some of my viewers here may not have. And I was intrigued by this because I went back today and I went back to listen to it myself and make sure we brought a little bit more new content to it. So we'll get into that. What I was intrigued by was that you were talking about how you also, came from a life that wasn't rich, right? You kind of had to grow up poor, kind of thing, and you had to learn the way, and you had to grind through it. And I have the same story, kind of like you do. So if you want to kind of go through that, where you started in life and kind of how you grinded to get to where you are today.
Yeah, absolutely. So, I mean, I grew up in New York, hustle bustle city, crazy kind of competitive type environment. I went to a couple, kind of good schools through the years. I went to Stuyvesant for anybody who knows that, and then NYU kind of thereafter, and then I entered kind of a very competitive kind of field in mergers and acquisitions. So, I mean, in terms of growing up poor, yeah, I mean, my brother and I were 10 years apart, and we used to love like football and basketball, and like it's just I had to hold like a wire every single time I wanted to watch a game. It was just very unclear. I was watching like Patrick Ewing and who was it, like Chris Starks and Latrell Sprewell kind of shooting hoops. And it was tough to see, but I love those games. And then we couldn't afford kind of a better TV, and both of us wanted to become more successful. So we both went to kind of good schools in New York. He went to Columbia. I went to NYU. He took doctor path, so he's a GI doctor, and then I took kind of the financial path, to be investment banker doing mergers and acquisitions. And so we both worked kind of really tough hours, and went through kind of a very tough grind. But the whole goal was for us to kind of stand on our own 2 feet. We did have relatives who were actually pretty wealthy and, would sometimes not treat us very well. And so that kind of fueled our drive to get better. And to kind of provide and so that's the whole story there in a nutshell.
So what I'm really hearing is Brady saying he's smarter than all of us, but he's being so humble about it because I mean New York is that's a private college and all that from what I understand, right?
Yeah, yeah, it's a good school. So there's a lot of good schools though. So
That's pretty awesome. I mean, that's New York, so it's going to be some high end educational stuff there. And you sound brilliant, by the way. I mean, I listened to the PGR podcast, and I was like, oh my god, I got this guy on my stream who's like 200 IQ, and I'm just like 50 maybe. So really cool to have you on for that. There was another question that came across. I don't know if you guys saw this on Twitter, but Sunshine. Okay, he asked me to ask you this, and I'm going to put it on the forefront of these questions just because if you didn't see it on Twitter, I kind of addressed this. Hey, we're going to have Brady on the stream later. I wanted to have some questions put into, say, Twitter. That way I'd have something to ask him and maybe something that you are interested in hearing about. And Sunshine asked, what is your favorite dish to cook? I mean, all I see all the time from you is like food. And I got to tell you, I'm like, oh my God, how do I make that? Or how, like, I don't want to make that. I just want to eat it. So if you could just answer that one for me.
yeah, so I'm a big fish guy. I like doing fish, and so pan seared, and so halibut is my favorite. And I either like cilantro, or I'll use a little bit of it's a Japanese kind of Asian fish stock type dish, or I'll just do kind of lemon pepper halibut, but I'll just basically just pan fry it. So that's how I like it done.
Is this a hobby?
Yeah, so I didn't start. Well, I started cooking more during COVID because there's no choice. And then I learned from my kind of older brother, a sister-in-law, and I wasn't very good at it to start. And then I started, picking up all these recipes and then kind of taking them, and I started creating good food after cooking every single day for a while, or like every other day. And then yeah, and then I just got a lot better, and I could actually create food that tastes good. Like I knew how to kind of make it more moist and just a little bit nice on the palate. So yeah, so I mean I like cooking all fishes, like halibut. Salmon is like is another good one. There's a monkfish that kind of is like people call it like a poor man's lobster, but it has a nice kind of texture to it, so I like cooking that as well.
Gotcha.
um
I find it so like I've seen so many pictures and I'm like I could talk to you about food all day long because I mean I just love food. So I just every time I see that I'm like, damn, I need that. But I digress on that subject. I don't want to. You guys are gonna start getting hungry. People are gonna start leaving the stream, and people are gonna go to dinner. So let's just get we'll go to the next subject here. If you want to share your screen real quick, we'll kind of go into some of the other things, your charting skills, and some of the questions that I see on Twitter here, and then we'll go into the Q&A a little bit later here. So let me get that up on the
Gotcha.
screen for you guys. Give me 1 second. Wow.
Is this good? Can you see it?
Give me 1 second. I'm still trying to
Of
maneuver
course.
here. We got it that, and then we got that, and then that. All right. Can you guys see it? I think we should be able to see his screen. It is flickering on my side. Let me just. Was it flickering
Yes.
for you? Because mine was just like losing it. All right.
No, mine is.
Here we
Let
go.
me
Here we
actually.
go.
You good? Okay,
Yeah, we're
great.
good. So, I mean, if you want to take us through a chart, maybe you'd like to, talk about. I don't know if you want to talk about a certain subject. I know that you talk about a lot about VPA, and that could be something you could go over here for these guys or Fibonacci's. Just you can kind of pick what you'd like there and just go from there.
Yeah, no, absolutely. So I think, no matter what you use, right, all these techniques, EMAs, Fibonacci, like drawing demand supply zones, volume profile, they all kind of do something similar. And I mean, you don't need to use 16 of them. The first thing I will note is indicators get a bad rap. But if you use the right ones and you kind of and they work for you and you understand how they work, they actually do work. The only issue that I have with it is that, and I obviously, tried a lot of indicators back in the day. My mentor was, kind of kind enough back then to show me all the mentors that are in my kind of education channel on Atlas. But I think at its core, no matter what tool you use, volume price analysis is key. Like if you can look at a candle, you can look at volume, and you know what's going on. Like that's kind of your money shot. And so in my channel, there's two Anna Cooling books that I recommended. Notice how I said two. So I know the first one is extremely famous. It's called A Complete Guide to Volume Price Analysis. And the second one, I can't remember. It's like stock trading examples with volume price analysis. But she only has another book that says volume price analysis. So you could just take that one, and it's 400 pages long. And so that's in my EDU channel, kind of coupled together. So what I would kind of suggest to go over that is you read the book once or twice, and then you go through the examples, the 400 plus examples in that second book, over and over and over until you get it. So I know, I had posted this on Twitter, and some people kind of read it a day. I was like, that's insane. I mean, it took me 4 weeks to, obviously I can read things, fast, but the whole goal is like, if you're reading something, right, you want it to be able to translate to profits for you or to something, right? Better entries, better exits, better whatever, right? So there's no point in rushing, because if you rush through and say, hey, I finished reading it, so then now I'm a great trader, it's not going to work that way. You just have to practice. So I would just practice one thing at a time. So yeah, so I mean those are the two books I would suggest. And then this is just an example with SPY, just to kind of over VPA real quick. Maybe I just get rid of this line for now. Not trying to make this a charting intensive session, but just to kind of run through. Maybe I put this on 3 months so I can zoom in a little bit. Okay, hopefully these candles are easy to see. Actually, I did highlight this. I don't know if this bothers anybody, but hopefully it doesn't. Um, Anyways, so the whole point here is that you see a candle, right? Let me actually just delete this. I think it's kind of annoying. Okay, so if you remember, I think everybody remembers, right? There was a sell-off kind of here, right? So the first thing as a swing trader, I mentioned this in the PGR interview, so I'm not going to be repetitive with that. But I look at seasonal cycles. So basically, late Feb and kind of sorry, late January, Feb is kind of when you want to be, kind of a little bit more cautious. It could still be hot for the first half of Feb, as we saw. But you just want to be more cautious around that time. The market's generally hot from November to April, right? With February being a weaker seasonal month. And generally, second half of kind of March, early April is stronger seasonally, right? Obviously, there's going to be little quirks here and there. And then after you get to the summer, it kind of goes like up, down, up, down, up, down, with kind of July as kind of the stronger seasonal month. And then you have then yeah, August is when those hedge fund professional guys, right? They go on vacation, so it's not necessarily a red month. It's just lower volume, right? And then September and October really suck. So you should kind of be aware of those months, and you live through it, so you probably know the pain, quite a lot. So this is an example of VPA, just using SPY. And then I'll go over another with so I trade a small cap kind of sector rotation type plays. So there's like a million sectors out there, weed and like NFTs, WSB, so on and so forth, right? And I also do mid and large cap cult tickers. But anyways, let's just get down to this. So SPY. Um, so oh, is that somebody's keyboard? Anyways, that's cool.
Sorry, that's me. I'm just trying to let guys know that they should join the Atlas After Dark chat room before we finish this.
Gotcha. Yeah, so I mean, this is SPY, right? So you remember, you saw this going down. So I'm just gonna read this and then not, kind of bore you half to death. But basically, like, there's these huge sell-offs, right? So this is we call this in the Anna Cooling book a widespread candle. It's widespread because the open and the close, right, are kind of widespread, right? So it's the high and the low and the open and the close, right, on high volume. So what I look for in volume price analysis is anomalies. There's no anomalies here. It's just a ton of people selling, right? Then I go over here. This is still pretty widespread, and it's a high volume. It's high volume selling, right? Then you go over here. So actually, I was supposed to get rid of these volume bars in the background to have it here, but just bear with me. They tell you the same thing. Okay, so then this one, you kind of see, hey, this is the first green that we had, right? So we fell down this much. This is the first green that we had, but it's on above average volume, and it's with a wick over here. So that means some buyers, are coming in. Um, right? But it's not like, this is still much lower volume than that. So what I want to really pay attention to is you see these successive kind of, red candles going down. On this candle in particular, when the reversal began, you see a longer wick and you see the highest volume that we ever saw in these periods. So I guess what I'm trying to say is you can draw kind of supply demand zones, EMAs, or you can do support resistance lines, Fibonacci, and you'll find out that this, one of these areas is a key area. And then you read this, this is what, Anna Colen calls a stopping volume. Stopping volume meaning like, okay, see how there's a lot of volume here, right? Then how come this candle isn't worse? Like meaning like why don't you see a super widespread candle like this? You see, you see a lower wick. These lower wicks, right, with volume represent hey potential kind of buying in. They're basically coming in to stop the selling pressure on the downtrend, right? And this level also aligned very nice with a level I drew before. So don't want to make this too technical, but this is just I'm trying to stick to just VPA for now, volume price analysis. And then so you can kind of see the next day, right? We followed up with another kind of, longer wick, and green candle, right? And then, this was where we started to get kind of a short-term move up. But you see, like on this move up, right? There is kind of, lower and lower volume, right? So one of the classic anomalies is basically rising prices with lower volumes, right? But that's not the only anomaly, right? Sometimes you can have rising prices and rising volume, right? But the spread of the candle becomes more narrow, meaning that the open and close get more and more narrow. What that tells you is basically that you know if you have all this amazing volume, right, that's increasing and rising, right? Why is your open and close getting more and more narrow, which would kind of imply weakness, right? And so that's where these are where anomalies kind of come into play. Now, I know there's a lot of candlesticks out there, and everyone's trying to like memorize names of everything. The thing is, like, you actually don't need to know all the names of the candlesticks, right? You just need to know what they mean. And so think about what wicks means. So upper wicks, weakness, right? Lower wicks. But the thing is, like, there are certain variations, right? Like, for example, you could have like a hammer right after a downtrend is when everybody knows that that's like a very common kind of candle, right? But that would be a hanging man on a uptrend because it's showing that hey, price reached a certain peak, but then it's showing signs of weakness because it's coming down. Buyers did come in initially, but it's showing the first kind of potential signs of weakness. So anyways, what I really love is kind of these stopping volume candles where I see like wicks with high volume to basically come up and eat shares, especially when it matches up with one of my Fibonacci levels. That's just kind of the general gist. And so the reason why I was thinking this, Spy would kind of, that there are some potential short-term weaknesses. Spy likes to do this little rounding kind of thing. Like, if you read the Anna Coling book, there's a distribution phase. But long story short, Spy likes to do this like rounding kind of, type pattern and stuff. It isn't just like, go straight to the sky and then like V down. You know what I mean? So it's different than that. So I mean, that's just kind of volume, just volume price analysis in a nutshell. I know I talk a lot, but
Oh,
you'll be able to read it more about it in books. So
so you're really, I mean, that's really good. It's a lot of information for sure. It's like being shot with a fire hose with all the information, right? It's like it blows you away. Do you think that that kind of strategy works on everything? Maybe it specializes more in the mid cap, large cap realm. Just curiosity.
yeah, it works on everything because if you can read volume and you can read price, right? Whatever so all your EMAs and your fibs or whatever you use, right? They're just trying to give you levels, right? Like, oh, 395 is a key level. This works for day trading too, because think about day traders, right? If you're a smart day trader, you're going to be basically trying to, buy during kind of lower volume kind of pullbacks, right? To certain key areas, like let's say daily resistance, right? And so once you draw those key levels, right, how do those levels are going to, potentially result in a next leg? And so, it's very typical to see kind of, hey, lower volume pullback, it begins its next leg, makes a series of higher highs, right? So, like, for example, when you're day trading, what you'll typically see, and I learned this from shout out to kind of Rodesa and Atlas, but, when a stock is kind of going down, right, in some of these, kind of day trade plays, right, it's going to make these like lower highs over time, right? And after it makes lower highs, it doesn't just like start making higher highs and then lower highs after that. Sorry, higher lows after that. It'll need to enter consolidation, right? Consolidate, and preferably on lower volume, right, to not have weakness, and then kind of make its way back up. It's the same thing for swing trading. So this applies like any type of stock, FX, futures, whatever the hell you want to trade, right? If you have volume price analysis, you can really kind of understand. And so, there's three things I recommended. It was those two Anna Coling books for volume price analysis, but she doesn't cover candlesticks quite well. And so there's another book on the channel called Japanese Candlesticks by Steve Neeson, or you can do like flashcards, whatever the hell you want. But they all have all these fancy names. I think before learning all those fancy names, which you'll just get used to, is that they're just understand what they mean, right? Because if you know like something's a shooting star or inverted hammer, or like hey that it's just bullish harami, it's just it's not gonna be helpful if you don't know how to apply it, right? It's just hey, I know this like really cool name. It's the Dragonfly Doji, so right. So this is
Right.
yeah, and then Doji's typically signal indecision, right? But that's not the signal you want to get from it. Doji's could signal a potential reversal of a trend, depending on where it is, especially if it's high volume. So you just got to look at everything else around it, right, to see, hey, what does this kind of mean? So,
Yeah, agreed. I mean, for dojis, for myself, I'm like waiting on the next candle, honestly, because I'm like, well, that could do this or that. Honestly, it's still 50-50, kind of letting it do its own thing.
yeah, sure.
And then another thing was, I don't know if you can pull this up or if you even want to, but I know you talk about weed stocks a lot, and I love the chart TLRY. I feel like the VPA on it, maybe you could kind of go on some analysis on this. This is a pretty nice one, I think. Hopefully, you think the
Oh
same.
yeah. Yeah, for sure. So, I mean, the first thing I do, by the way, when I look at a chart, is this is just pretending I knew nothing about, Tilray. Which, oops, sorry, I gotta put this on the daily. Oh man, frustrating.
I'm
Okay,
sorry.
so
I
yeah,
put you through charts. We didn't plan this, guys.
oh,
Apologies.
no, no worries. Yeah. So if you're going like 5 years back, you can kind of see that like there's just too much stuff here, right? So this is pulling up a 5 year isn't going to help. So I usually go down to the 1 year, or if it's hard for me to see on the daily in 1 year, I'll go to the 4 hour or hourlies, right? What I mean is like if you pulled up like the 4 hour 180 day, you can kind of see certain levels a little bit more clear. If that makes sense, right? It's just more information, easier to see kind of support, resistance, supply demand zones, so on and so forth. I drew this a while back, so that's why you can just kind of ignore that. When did I draw this?
Yeah.
Anyways, so just real quick, VPA here is let me just zoom into 6 months so you can see it more clearly. Yeah, so tail rate just went up. I'm just gonna start from the top, right? It just kept going up, right? So there's increasing volume, lower volume pullback, increasing volume, boom, boom, and then this is a hangman. So a lot of people think like, oh, this is a hammer. It's a so the same candle will mean two different things, right? So after a downtrend, and you see one of these things, that's a hammer. After a uptrend, this is a hangman. Before you think about those crazy terms, right? What is this showing you? It means that first of all, it's gapped up, right? Reached a certain price, open and close is kind of this narrow little kind of window over here. So the narrow body, right, with kind of a long lower wick. So it shows that there was kind of price went all the way here, right? And it did come back up, but it shows the first sign of extreme weakness, right? And then you can kind of see this hangman. So like a gap up with a hangman is just like anyways, so that's the
Disaster
first thing.
coming? Is that what it's symbolizing? I mean,
Right.
really?
Yeah, so the thing is, like, you can see hangman with low volume, but like this is high volume. So you always want to kind of look for anomalies, right? So like if you have if you so for example, this huge candle over here, if this is low volume, right? You got to think about anomalies. So this is on high volume. So everything makes sense, right? If there's a ton of selling and there's kind of this long kind of widespread candle, then that makes sense. So like when I was looking at Tilray, you could have gone like a quick bounce, intraday bounce or whatever out of this, right? And done like various moves. But if you were a swing trader, right, I wouldn't even touch this until I start to see. So you remember, what usually happens is it'll hit a peak, right, and it'll start doing these lower highs over time. It's a little harder to see here, but it's not as pronounced. But it'll do these lower highs and then just continue to fall down until it wants to begin its consolidation phase. So first of all, I'm not touching this if I'm a swing trader. And this is this, I mean, this is a long upper wick, right? That shows weakness, right? So I'm still not touching it. And this is like, okay, it's a green candle, but look, it's on like, lower volume, right? So basically it's just I'm not touching this until it gets to a kind of better level.
Hmm.
And what I use for that is like if you do just quick fibs from like low to high or whatever, right? I'm not trying to, get super advanced here. I always wait until at least the 50 or the 61.8% to potentially buy. So there's a key word there, potentially buy. I don't, just say, hey, I'm just gonna buy at the 50 every single time. That's not how it works. Right. So you have to look at VPA because look, if you try to buy at the 50, right, you would have just lost money all the way down, right? Or if you tried 61.8, you would have still lost money. So the thing is, like, I use this as a general gauge, and this puts like the 61.8 at like 28.30, and puts this the 50%. So the midpoint, it doesn't matter Fibonacci or anything. The midpoint is always a key level. You look at this with Dow and all this other kind of shit. So if you look at this, right? So okay, so sometimes I like to add plays just underneath the 61.8, provided it's like it's a good level and it kind of makes sense,
Like near
right?
support, like
Right,
78.6.
right, but the candles need to tell me, that hey, it's a good area to add. So I'm not going to be adding on this like, right when it's so. For example, so this 50 didn't really work out. This is a weakness candle, right? I'm not going to be trying to add this. This is insanity, right? So I'm going to give this like 3 to 10 days or whatever, right, until this kind of settles out. So start getting lower volume around here, if you can kind of see, right? So this is slower patch. This doesn't mean it's not going to fall back, fall further, right? So the thing is, I'm watching, right, and then I'm looking at these levels. So now it finally falls below the 61.8, right? And so the what this is I have webinars on this. It's the volume profile, but it's also covered on Anna Colling's books. It shows volume at various prices versus volume at X time, right? And so there's a level here, there's a level here. This is what we call volume desert. Volume desert means price action tends to move from high volume areas to other high volume areas. Makes sense, right? Because if there's if it's a key level where there's a lot of activity before, it's, historically, then it's likely to be a key level again, right? So this is a very big spread and a dangerous spread, meaning like, because this is a $13 spread, right? 13.30 times 100, whatever you want to do. This is a big spread. You're going to lose a shitload of money if it gaps down over there. So basically, you want to give it time to just let it do its thing. What I'm waiting it for is like consolidation, basically some sort of cluster for it to, start consolidating. And I also want to see kind of like yeah, maybe some of these wicks, right, to see potential accumulation on higher volume, right? So I mean that's what I'm kind of going with. So I didn't attack this. I remember my first entry on this was around 23. Forgot when I added it, but I did alert it on Twitter, and it went up to like 30 immediately, right? And I did the same thing with Virgin Galactic, which I can actually show. This is a good one. So this is on the most recent sell-off. If you look in the videos, right, this is what's known as a demand zone. So demand zone it's different than support and resistance, but what happens is if you see a gap up, right, or if you see like a move out of a consolidation area, that means that this results in a demand supply kind of imbalance, right? Because like people want to fit bids, couldn't fill their bids. So the next time it comes to this area, it becomes a good zone to buy. You take the upper zone and whatever. So this gives you just a general zone, right? And then you can zoom in on smaller time frames to be able to get the better entry. And you see this wick that we just talked about for VPA. It did this wick right on this kind of zone, and it's also confluence. Confluence just means a million things tell you the same thing, right? So you see confluence, and then now you can kind of add. So I added this, I think here or here, I forget which one. I think it's this candle, and immediately went up the next day, and just kept moving up. So you could see, like by applying VPA, you're not a lot of people, they swing and they spend like 6 months in their plays, right? So a couple of things is I talked about trading around a core in PGIR, and so you kind of reference that. I also have some materials in the Discord. But like other than trading around a core to maintain your upside but also collect cash in the meantime, right, it's also time. And the reason I thought about this is because I had a full time job, like many of you do, and I was like, hell, man, I can't wait like 2 months, even if I get 100% return. It's ridiculous. right? It's like, how can I compound like a day trader when I can't be at my screen? So this is kind of what I do to basically I identify the reversals before they and like nearly like kind of as close as I can before they reverse. I don't like, try to hang around for like 10 days and stuff. And so this was also really good because I knew that a lot of these mid and large cap stocks and even small caps were moving with the market. So if I analyzed SPY correctly, then I knew that, if SPY gapped up, then so would SpaceX. This is like a triple levered ETF doing the same thing. Long
Yeah,
story short, that's kind of what I have. So
yeah, I like it a lot. I know a lot of people are probably just like blown away already because even myself, I'm like, this is a lot of information considering I mean, VPA, I think I practice it, but haven't read the book myself. And then two, like you have fibs, you have your volume profile is what you call it, right? So there's a lot of
that's
that
correct.
information too. So if you guys want to know more about that, I'm sure you guys can check out Brady's educational channel, which is also an atlas. Is that something they can do?
Yeah, yeah, no, absolutely. It's
Okay.
Brady's education. It's been there for like 2 years or something.
Yeah.
So
So if you guys have questions about that and you want to look deeper, that's probably the best area to go look at that. Because right now you might be like, I don't know what that is. There's just a bunch of lines, and you want to know more. Another thing too, I know we were talking about, or people were asking you about OCG. Do you want to go over that, or is that more of a Fibonacci kind of play? I know we talked about it a little bit.
yeah, so I did this on the fly. I had a donut in my mouth, and then I was and I had been swinging for like 3 years. So, so anyways, yeah. So I mean, so the whole thing here is what I did with OCG is with all these kind of day trade plays, and then Rocket may trade similarly, and some other kind of the Atlas studs. But yeah, so I mean, first thing is I just try to go as far back as possible just to kind of get a gist of what's going on. So there's really not like too much crazy stuff. So this is where like the daily is like super hard to see stuff. I guess you could still draw levels, but what I would go is one if you go to the 180 day over 4 hours, you can see there's like there's a level that you can kind of draw over here, right? And there's multiple touches, and so actually it might be easier to see on the hourly. Anyways, you get the point. So basically, I'm basically looking for past kind of support resistance levels. This is a little bit easier with a chart, not as crazy as this. So I found this one, and then the first thing I did is if you zoom into the to the 5 minute. So what I do is I always wait for 5 minute candles to close. Learned this from Rodesa too. But anyways, I wait for the 5 minute candles to close, but you could use the 1 minute to kind of understand what's going on. And you see this level that I drew from history. So even a day trader looks at daily, weekly, whatever time frames, or 4 hour, whatever the hell they use to zoom in, because that's how you kind of draw your levels, right?
Hey,
Like
hey, hey! Be
these
nice. Be nice to us day traders.
are, sorry.
No, you're good,
So
man. Go ahead.
but yeah, I mean, so like if there's like a daily resistance level, right? And that daily resistance level, right, could turn into support. So that's a key level that they could bounce off of, when you're trading the play. And so, anyways, so you can kind of see this level has a lot of touches already. So you see, like the level you drew wasn't kind of not good. And then what all these other lines are, I'm just drawing other levels because the goal is like after you enter a play, right? Actually, there's also some confluence here. I saw this during the day, but maybe not. Anyways, cool. So if we go to yeah, so then how does the stock? So this is what we're just talking about, right? Lower highs, right, over time. So when you do lower highs, you could take like quick scalps, but these are kind of tougher. You could take these scalps, obviously, but the bigger move's going to come after consolidation and after it makes a series of higher highs and higher lows, right? If everybody agrees. So you can see it's doing lower highs, right? And it's kind of base at this level, and then so I added around here, when it was basing, um, right? Because this is kind of a low volume kind of pullback, right? It's basing. I saw that W key was going, that could set off NFTs again, whatever, right? And yeah, I mean, the market obviously sucks, so you're not going to have multiple hits, but this could have been a big play, right? It's just and if not, you just take the kind of take the nice win. This is still like a whatever spread. What is this, like 9 to whatever 11? and it did it twice. Yeah, so I mean, let's say this, the market had a lot of volume or NFTs were hot, right? I was looking for it to form this series of kind of higher lows, right, on these levels, and then for it to eventually just like to the sky. And you can, these levels, you would basically like, you see how there's two touches here, right? So you could draw another level. I mean, but this is a higher level, right? Like you also got to think about where the stock is right now. From 15 to 10 would be a 50% move, which isn't, kind of not reasonable in this market. But yeah, I mean, just draw levels as you get there. But you look at these kind of, you're looking for resistance breaks, right? Past resistance breaks, and then you kind of go from there. So that's the whole reason I did this, and it didn't work out the best way. Like it didn't kind of, but I mean it was a profitable trade as a quick move in a bad market. So you take what you get. So
Yeah, I definitely understand it. There's definitely a lot of information there on the chart. OCG, beautiful off of TKAT sympathy play. I know we were pretty much all over it on day trading just because of that momentum itself. It's pretty cool to see how it kind of lines up with us as day traders and you guys more of a swing trader. We're looking at the same things, but we're just using a little bit different tools to really capture those things. And it's really cool because I mean I'm sure Fibonacci's work on intradays and things like that. We don't really, or at least I don't use them as much. Is there a just one last thing, I guess, kind of a chart that you could bring up and just kind of put like show someone how they would put a Fibonacci on that chart and why they would put it where you do? I don't know if you have a good example. If you don't, it's fine. I just wondered. I mean,
yeah, so
and that
yeah,
one's a
so
good
I
one.
had that. Yeah, I had that in a lot of the video. Let me let's try this one. I didn't use fibs on this one because I didn't want to. But yeah, I'm sorry. I'm just gonna think of a chart that makes sense.
It's okay.
Um,
You can wait if you want. Maybe we'll get to the Q&A and someone might ask the same question. I just didn't
yeah,
know if there was one right away that kind of stuck out
no,
to you.
yeah. So I mean, like in my webinar videos, I have like 7 of them. I go through like 50 examples of kind of how I do it. But basically, I look for kind of confluence on how you do it. But I'm gonna just do one. Just can't think of a ticker right now. I don't know why. Probably trade too many tickers. Um, okay, I don't really like this stock. Well, I actually do, but okay. So, anyways, this is CGC. So this is, kind of wheat stock, Canadian. I know there's like this whole U.S. Canadian argument with wheat stocks, but let's not talk about that. So yeah, the first thing I'm gonna do is I'm just gonna. I mean, I see this as an impulse, right? So I'm gonna just see how retrace. So the first thing is retracements. Retracements are easy. You just do low to high. The only thing is like you want to make sure that the levels you draw actually align with multiple because what's the whole point of doing Fibonacci, right? It's so you get as much kind of they call it confluence, right? So I use this volume profile here to see if there's like confluence with levels, right? And so it might be helpful. What I actually like to do is I like to go over time and then draw kind of key levels. You can ignore this, but like so like you could draw that as a key level, but um so, okay, so for example, I see a volume point of control over here, right? And so I want to see if this one's a little bit of a harder one to do. But okay, so let's draw a more extensive low to high. Come back. Okay, so I don't. I mean, this isn't my favorite, but like you can kind of see how fibs are generally respected. So just so you know, what I'm trying to look for here is you see how there's a volume point of control here. So fibs are basically like ratios, right? And they align with nature and whatever, and they work very well with in the trading world. And what I'm looking for here is confluence with this one area. So VPOC basically says that hey, there's a lot of volume at this price, so it's a key level. So if I base this level and I find ratios off of that, right, like 50% of that or 61.8% of that, if I base ratios off of that, then it's more likely to be kind of a good level, right? I combine fibs with kind of just identifying key levels, right? Like support resistance, kind of what we just did in some of the past examples. Like a look in history, if an area served as both support and resistance, combine that all together. But yeah, I mean, you can kind of see generally like fibs are, this is yeah, look, this is support, right? Sorry, this is resistance, right? You have all these resistance touches. Finally breaks, right? Goes through over here, kind of base. There's multiple touches over here. If you drew this on the 4 hour, you could probably see even more kind of touches, and you can see how it kind of aligns, nicely. But so I mean, quick and dirty, that's like that's fib retracements. For Fibonacci extensions, um, like this ticker before it went up to its current high, what you could have done is if you didn't know it was going to reach this level, this is I learned this from one of my mentors, Kevin. But you go here, right? So you're drawing. So the fib extension is basically trying to give you projections, kind of going upwards, right? So you're gonna try to like if I didn't know all this action over here and I just have this high, this is the highest that Virgin Galactic has ever gone. And so what I'm doing is, you could take any point, doesn't really matter actually. So you go from this low to here and you come back, right? And what this does is it gives you projections above this prior high. You can kind of see it hit those areas. I don't know if anybody sees this, but this is a key area that I hit,
I don't
161.80.
I don't know if it's just me, but that thing looks like it called it perfectly.
Yeah, yeah. So cold tickers like Virgin Galactic will hit the 161.8% Fibonacci kind of very accurately in a good kind of 1 month, whatever time frame. If you kind of identify the right kind of moves and whatnot. But yeah, so this is why I trade some of these mid cap cold tickers like Palantir already made its move to 40.45. Now I know it's back down and stuff, but I'm gonna be looking at that again. You can kind of see that this is just giving you extensions above. Like you don't know all this price action, but it's giving you, and you see 62.8. You see how close it is to that? Nearly
Yeah.
like almost on the dot, right? So it's giving you extensions as far as it's going to go. So this gives you potential price projections, right? And then and that are accurate, not just like some made up number, right? And then from there, I mean, these are just projections, right? I mean, you're not trying to like hold your play for a million years. What I like to do is if I know a play is going to reach something as high as this, I will basically, or like as high as this 161.8, I will trade a core around here, right? Depending on, I don't like scalp for like 2%. I mean, it's a waste of my time. But if there's like these nice 10-15% pops in a channel, I will take not all my position off, but some of my position off. But if I see it about to break out, I won't take as much of my core off because I want the big move, right? And like if it gets here, then I either take off more of my core, right? So I don't have as much of the core, and I buy something else, and then or I just re-add, or you kind of get the whole gist, right? It's just you have a core, right, of like let's say $70 out of 100, right? And then you're trading 30% of that, right? So 30 of that $100, and you're just trading it in and out, right? Not like these stupid scalps, but just like we're talking like 10, like actual moves, right? And then you could do that, and then once it starts to break out, you can bring your core down from 70 to like 40, right? And
Yeah.
then it's going to do the bigger move. So
Do you find that like you use those mostly whenever there is no like resistance ahead of it? Is that kind of like the general idea? Because there was like nothing above it, so you would have never known. Hey, here's a another area of resistance that I should look out for in the future. At least on this chart that you're showing.
yeah, no, I mean, this is where I go back in time, and I'll go back like 3 years and see, hey, are there any levels that I can potentially look at, right? And so it actually did reach. Oh wow, that's crazy. Okay, so it reached some of these higher levels. So for example, like I'd be drawing kind of, hey, this is a prior high, right? So I'm gonna kind of, that's not a perfect handle, but you kind of get the point, right? That's a prior high. And I'm going to be looking for some of these other things like you see I see two touches here. So that means that I forget what time we were looking at, but this is another key level, right? This is probably resistance, and we're touching it a couple of times. So then how is that level going to hold?
Right.
And then so just basically like me drawing levels, and then there's going to be confluence. So this VPOC, right? Like everything you do, you should use multiple time frame analysis, because if you go on the 1 hour, right, you can kind of see there's like this little desert up here. It means that once Virgin Galactic breaks this level, it's going to go nuts. I think this is ultimately going to hit $90, or I had 70, 90, but we need to wait for the bigger correction in the market to happen, and do all this stuff, and then eventually it'll kind of make its upward movement to retest this high. And then as for targets, what targets am I aiming for? I'm going to base this off of this prior high of 62, just like we did. And you'll see that this will give you, I think the next level above this, you can't see it, but is like 80 or something. So
Gotcha. That's really awesome. I did not even know that was a tool, so I might actually have to put it on some of my lists just in case. Uh, wow, didn't even. I mean, that thing literally almost. I mean, called it basically perfect. I couldn't have seen that. So pretty cool to use those tools. If you guys aren't using Fibonacci's, that was the extension, right? And then the other one's the retracement.
yeah,
So
fib, yeah. So the fib extension is for the projections. Yeah.
gotcha. So that's a ton of information there. Fibonacci extension, Fibonacci retracement is the two. So if you guys want to get into that, maybe like I said, jump into his stuff on the education stuff on Atlas Discord. You can hop into his channel. Tons of information there for you guys to better your trading careers. As you guys have heard, this guy has a background, obviously having to work his way up, and he has worked his butt off to get here. So let me just be one of the first to tell you congratulations on becoming a full-time trader and bringing your skills to the stock market. We can't wait to see more from you. Let's go ahead and let's head over to the Atlas voice chat where people are going to do a Q&A with us. I want everyone to make sure you're asking just one question and try not to cut off each other. All right. I just want to make sure it's clean, it's easy. We just want one at a time. I don't want to have to mute anyone. And let's go to that next. All right.
That's good.
All right, I gotta leave this chat thing somehow. Let's go stop watching. 1 second, guys. I gotta learn how to do all this stuff.
You want me?
So hang up there. Go down to, oh my goodness, there's so many people in here. Look at that. We are ready. Oh my goodness. All right, so Atlas After Dark. All right, make sure you guys are muting your mic, guys. Mute, 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 mute. Can we get everybody to listen? Oh, we're getting there. We're getting there. All right, Brody's muted. We're good there. General Charlie, can you mute yourself there? Thank you. All right, there's myself. Brady, you in here yet? All right, Brady. Wait for Brady to join in here. All right, take it easy on him. Be nice, all right?
Take it easy on him. Be nice, all right?
Make sure you mute up. W Nevers.
Whoops.
Mute up.
Who you calling? Who you guys calling at this time?
Hey, Rocket, I'm here.
All right, beautiful. So if you guys want, just one at a time, like I said, you guys can be like, hey, and then we'll just go with the question and go from there. Let's see if we can do this very smoothly. So go for it, guys.
Go with question. From there, let's see if we can very smoothly. So go for it, guys.
No one has questions?
Hello?
Hello.
Someone has questions?
All right, let me mute that guy. Anyone else? Anyone who's in the Discord who wants to ask a question can go ahead and speak up. You can unmute yourself just one at a time.
I have a question.
Yeah, go ahead.
About what percentage of your position do you scale out of at a time?
Yeah, so I need a little bit more info. It depends. Okay, so my scaling, I have a post on scaling in the Brady's Education channel. I did like a whole write up, but I will scale out based on where the chart is positioned, right? So if it's under consolidation, I'm not going to be scaling out a lot of my position unless I gave up on it or the market's weak. Then I do that to protect myself. But otherwise, like once it breaks out, I'll start scaling out based on levels. So what I mean by that is, let's say we just talked about the 50% or the midpoint, right? And that's like a key level, and I think it's gonna have some trouble there because it had 3 touches in the past, and served as both support resistance. I'll probably scale out maybe half my position there, or if it's near like a psychological whole number or half number, and it lines up with my fibs or my volume profile, there's like a ton of resistance there, I will take it. Or like a supply zone, which is kind of, mentioned in the videos and the, channel.
Okay, perfect. Thank you.
Yeah, absolutely.
Hey, Brady. I was just wondering kind of how. Okay, let me get my mind straight. I'm sorry.
No worries.
All right, so I was wondering if you like whenever you look to enter your position, if you go with your full amount. Obviously, you talked about scaling out of your trade a lot, but whenever you actually enter it, do you like go for like a full position, or do you like try to average up along the way?
No, no,
I'm
I
sorry if
never
you have a
go.
write up as well.
Yeah, yeah. No. This is all on the kind of Brady's education channel, but I can, add some color and then you can reference that too. But yeah, I mean, you never go all in. I mean, I guess, if you're crazy, you can do that. But yeah, you never go all in. And I scale based on in quarters and halves. So, like 1/4, 2/4, yeah, 1/2, right? 3/4. And what that's based off of is if I'm pretty confident that a level is going to hold, like Virgin Galactic, I'm pretty sure it was going to hold that demand zone that I had, right? With a little bit of buffer zone, I'm going to add 75% of my full position there and then do the other 25% to give myself, wiggle room, right? But if it's like at the 50% fib and like or midpoint after a big drop like Tilray, and volume price analysis still shows some weakness, I won't add 75. I'll do maybe like 40 or 50%, or just that the probability is based on kind of how the chart is set up. That's how I will scale, right? You want to scale at key levels and wherever it makes sense, and for your risk kind of risk reward tolerance.
Absolutely. And I also just wanted to ask as well, how is your transition to like going mostly cash bin? I know you've been putting in the write ups that you've been looking to do that, and just wondering how like the past couple of weeks have gone.
Yeah, no. So this was the whole plan. As the market got close to 400, it wasn't just going to be like, oh, 100% cash today. I was 100% cash on one day, but like what I've been doing is using kind of only X% of my capital to basically build a cushion, right? And it was like 10, 15% of my cap to build a cushion over time, and then I would go cash when I started to see, everything we just talked about with SPY, and I was like, hey, even if it goes up to the 400, 410 zone that I'm pretty sure it's going to hit, it's going to, it's going to take some time. And so I'm building up a cushion. So basically I have even more cash, right? When the time comes to buy. And we finally saw the sell off, right? So basically I've been playing with like 15, 20%, 10% of my position for the last couple of days. And then we saw this kind of, bigger sell off today. And the reason I do that is because, you get bargains a lot faster when there's more volatility. I do take profits faster, but like I'm also actively managing my position. That takes some practice. So if that doesn't work for you, you could just kind of be in cash and whatever and have your hedges. I think PGIR has an episode on hedges and stuff. So
Awesome. Thank you so much.
for sure. Yeah. Yeah, so I have a scanner. Unfortunately, I can't share that just because, a couple of friends and I kind of work together on it, and out of respect for them. But the other thing with Spy too is when my scanner doesn't have as many plays, that's also a warning sign to me, and then I can see it in the volume price analysis too, right? Like if there's like 20 sectors, right, and then none of them are kind of hitting my criteria, that's an issue. So that means something's happening. So yeah.
Hey Brady, I just had a quick question about so have you always been using these Fibonacci levels as your indicators? Because I know there's a lot of different indicators you can use. Like, what is your experience with other indicators? What are potential weaknesses that you've found with using Fibonacci's to make your decisions? Just kind of on other indicators. Like, what is your experience with those?
Yeah, so the indicators I found success with are kind of in my channel, and no credit to me for kind of just some of my mentors showed me some stuff, and they actually work. The only my as I mentioned earlier, the only issue with that is like whatever shows up on indicators is going to be in volume and price, right? And so you're kind of like robbing yourself of training like real good foundational skills. Like if you can just read volume and price, like kind of a master, you'll be able to just like move around with ease. Like you'll be extremely comfortable when you trade, like when you can master them fully, not just like one random candle there, but understanding big picture. Okay, what does this tell me on multiple time frames? What do I need to watch out for? It's all in those books, and then just kind of practice. But yeah, there's a lot of indicators out there. Fibonacci is just basically making levels. So as you saw with like Virgin Galactic, I didn't need to draw fibs. You could just literally draw a demand zone, and you could draw a few levels, and then you have your entries, exits. Like OCG, I don't think, yeah, no fibs there, just drew levels from the past, right? So fibs is just kind of an easy way to draw levels, but I use fibs because I do like the 50 and the 61.8% retracement. It's just a way for me to see, hey, what's the midpoint of a potential drop, and what's the 61.8%. Those are kind of key levels. Like, if some of those chartists out there, they look at the 40 and 50 level. This is beyond fib guys, like some of those, more advanced, crazy, like, really good people do those, amazing charts. Not really thinking Elliott wave, but you kind of get what I'm saying. So,
Yeah, perfect. Thank you so much.
yep.
Hey, Brady.
Yes.
Hey, thank you guys for everything that you guys do and provide. I wanted to ask you on your Virgin Galactic chart with the high volume node that you had with your demand zone drawn, do you think with the strategy that you use with the volume profile, do you think you can kind of relate those high volume nodes to demand zones? I'm not saying that it always can work, but obviously you have to look left. But do you think that can actually give a person some type of insight when it comes down to drawing supply and demand zones?
Yeah, yeah, no, absolutely. So, the Anna Coling book, I think it's chapter 9, she mentions, volume at various prices, right? The reason there's a lot of volume at certain prices, right, is because it's a key level, right? And if there's not a lot of volume at a certain price, it's not a key level, and it means that price can just blow through it. So let's say you have high volume nodes, right, at 20 and 16. This happened to Nicola when my buddy Hugh was shorting it, right? It just blew through the roof from like, I forget, it was like 25 to 20, whatever the number was, but there were low volume nodes down there, right? And then like they had just released some like ridiculous, bad news, fraud, or I don't know, I forget what it was, but it's just you have a catalyst to basically do that. So yes, you can use them as key areas. The only thing is the demand zone provides you with something. It's like an additional concept that I think is valuable. It shows, hey, after consolidation, right, something moves, up or down, and then it creates an imbalance. So the first time it touches that, that's your highest probability trade for a potential move. So like the you wouldn't the volume profile would show you that that's a key level. It wouldn't kind of give you that information. So all these things, like, they all kind of work to give you stuff. And the supply demand isn't like, me drawing an indicator. It's me drawing a box myself manually, right? So it's just, these they all work together as confluence, and you kind of pick what you want to, use. But I would say volume price analysis is kind of the core of, whatever you use. So people actually use either volume profile, which is volume at prices, in combination with volume at time, or they'll just use volume at time. So it really kind of depends. So
Okay, thank you.
absolutely.
Hey Brady, you talked about when you were where you would enter a position. Can you talk about where or when you would determine that the swing play would not be worth it and to cut your loss?
Well, I swing with the market, especially now that small caps are like following it, which I didn't, see that much of before. Rocket can talk about that too. But yeah. So I mean, yeah, I look at the market. If market, sucks, I'm gonna have to just, like, even if I see great potential, like NNDM, for example, I think that's going to 30-32 by year end, 3D printing type play. But the thing is, like, I see a bigger correction coming up, and all of this, and like, I'm gonna have to hold through a weakness, which is dangerous, especially since I know it's coming, right? It's like it doesn't make any sense to kind of just sit there. And so in terms of like where I take off, right? Like, let's say Fibonacci, they give you certain resistance areas, or you draw your own. Don't use fibs. You just draw your own kind of support resistance levels from the past. right? Look at the daily over 3 years, 4 years. The time frame depends on how far the chart goes out, right? You're looking for multiple touches. You're looking for, just what basically touches, right? You're looking for touches over time, and however easy you can kind of see them on whatever time frame. And so those are your key levels to draw, and then those would be potential take profit areas, right? But then you also need to keep in mind that, like, before a stock like Virgin Galactic will make its move to $60, it's going to make me make like a lot of 10-15% moves in the meantime. So are you going to take profits? Yeah, maybe. But you also don't want to miss that bigger upside, right? Like SNDL is a good example from when it was like lower price and stuff, right? This is when I thought weed was going to make its mega surge, which it did, right? I mean, this is just the first leg. I think there's more to come. And so, if you think it's going to make its mega surge, you can maintain a core, but you still like trade off a position. Like SNDL could have given you like 20% gains on multiple pops, like 5 pops. That already adds up to 1x return, right? In like 2 weeks, right? So it's like you could trade around the core until it like actually breaks out. So I mean that's what I like to do, but I won't like sell a core if I think the position has like 1x upside, right? Like I'll trade a small portion of it, but like I won't be taking the bigger profits until it properly breaks out. So
Hey, Brady.
yeah.
Earlier, you were saying about scaling into a position. You're using examples of 25%, 50%, 75% of your position. How do you determine what your max position is going to be so that you know what your percentages are going to be to scale in?
Yeah, so I mean that really depends on you. So there's a certain size position that I like where I can make so there's like a typical size for a like swing, right? That I want to take, right? And then for that size that I'm willing to take and I'm used to kind of seeing, and I will scale it up over time as my grows. But overall, like I'll take that amount and I'll be like, okay, so this is where I want to be. So if I see like some weakness and I want to take a starter position in something, I'll take it, but like I won't put in the bigger amounts until later, especially if I see potential kind of the market falling and me getting better entries. So think about BOXL, for example, right? It traded in a channel from like 235 to like 260, 270, like Scalper Ryan and like Rodesa, like we traded like 8 times, right? Plus, this bigger move we got, most recently. And this is just all under 2 weeks, right? So like it had like these two 17% plus pops, plus like multiple 10% pops, like all within like a 10-day range, right? And so like I love these plays where hey, they have the bigger upside and then you can also trade around a range, but the core is never disappearing. Unless I see the market's going to shit, then I will actually have to take the core. It's sad, but I have to take the core. Like SFET, I had a position in that and it went like 40%, but I didn't get to benefit from it because I sold my position, not because I didn't believe in it, but because the market is just it's too dangerous. Like that thing could drop 20% in one day. So I just, sometimes you just got to make some of those decisions. But in a normal kind of non like super volatile market, right? I mean, I would just like, I'd be waiting for the breakout, basically, and then just letting it kind of do its thing. So, I mean, that's the whole gist. Does that answer your question?
Yeah, that definitely helps. Thank you.
Yeah, absolutely.
We're gonna take maybe like 2 or 3 more questions, and then I think we'll go into ending the stream there.
Sounds good.
Ready?
You're breaking up, buddy. Try again. No, can't hear. Try to reset your mic, maybe. I'm not sure. It's all like, can you hear him, Brady? It sounds like muffled.
No, I can't hear him at all. I mean, you could also type somewhere.
Or yeah, you could type in the Twitch chat if you want to do that. Maybe for your question. Good idea.
Got a good question. We'll wait for him. Brady, I know that you likely haven't had a chance to do the research you want to do first, but if you have, would you say that the bit of market weakness today changes to the timetable for your expected, bigger pullback? Are you seeing that maybe come a little sooner rather than later, or are you thinking today was just kind of a typical blip?
Yeah, so what I see in the pattern, somebody drew like some like rising wedge or some like bullshit pattern the other day, which wasn't very nice, but it's okay. Yeah, there's a lot of mean people in this world. But long story short is there's a pattern, and I think what's going to happen is the bigger drops either going to come, this like late April, May timeframe, or kind of September, October, right, during the weaker seasonal months of the year. And so in terms of so that's that. So what I think is going to happen is that I talked about kind of having short-term upside, right, for the next 2 weeks before it falls. Like I said, so second half of March, early April is typically strong seasonally. I think the market can obviously pull back, but I do think there might be a little bit more gas in the tank before it does its bigger drop because I mean look at it. I mean we almost reached 400 and it's like mid March. So, what I'm thinking about is, and I got to do more research because now that it's reached this level, right? The key to doing this is like, as you get more data, you can be more accurate with it, right? Because the amount of scenarios basically narrows. But long story short, I think what I'm gonna do is potentially eat up some dips, but not right now. I'm waiting for. I had a post on Twitter. I think 385 was a good potential risk area. I kind of drew it's like a support resistance area. But anyways, so that's one area I'm watching, and then 390. But I think it's just gonna shatter through it. But I think it's 385. So I'm gonna basically see how the market reacts around there, like VPA, like at 385. I want to see how VPA looks, and then I will be basically buying stuff based on how SPY looks. So if I see still extreme selling, I'm not going to be scaling in small cap positions just because small cap is getting crushed with the market, right? So it's not like one sector is doing really well, or sorry, it's not like small cap world is great and then the broader market isn't. So that's like overall, but I gotta do more research now that we're in this zone. But I did have it falling. Yeah, I talked to Rodesa and Scalper Ryan. I did have it falling, kind of like today, tomorrow into next week. After that big move we had, for with the Fed, and so yeah. So I mean that's basically what I'm thinking about for timeline and stuff like that. So yeah, I'm just being cautious and I'm like being very careful with my cash balances every night. So that's the whole gist.
All right, I have the
Okay, cool.
question
Thanks.
from.
Yeah,
Oh,
I look
sorry.
forward to the write-up.
I have the question from.
Hey, Brady.
Hold on, one sec. The
Hey,
question that we
I'm
couldn't
still here.
hear. Can you hear me?
Okay. I was
Oh,
just wondering
never
if
mind.
you could quickly talk about overnight swings and what you typically look for in them and how you usually play them.
Yeah, so when I say overnight swings, by definition, I'm a swing trader. So like when the market isn't, like super volatile, going back and forth or just dead, I usually get a lot of my moves within 5 days, if not within 10 days, so I can, kind of cycle stuff through really quickly. You may have seen this when the market was kind of hot, like everything that I was in, and it just kind of went off. Is beautiful. um, those were fun times. And I'm so sorry. Your question was again? I think you just blanked out a little bit.
If you could talk about what you look for usually when going in for a overnight swing or something over the weekend.
Oh yeah. Yeah, I mean it's just it's the same thing I look at when I just regularly swing, right? If I'm going to swing something, it's going to by definition be overnight. So it's just, all the same VPA concepts that. And I also look at the market, right? So I look at the market, I look at the play, I look at, hey, what season are we in, right? Is this late March, whatever, okay? How's the market set up? Is it going to potentially crash at any time? That means that when I go overnight, I have risk, right? So for example, like one of my plays, I'll be like, hey, okay, I got like a box sold, I overnighted, a portion of the position, right? And then I was like, okay, but I'm doing this during when the market's a little shaky, so I'm not going to kind of put the typical size I would typically put, maybe just do a quarter. And then if it falls down in the morning, I'll add to it, and then I'll trade the quick pop out of it. Usually, sometimes if the market crashes, right, like SNDL, for example, like it would crash 20% and then it would be eaten right back up. So it would literally do like a plus 20% like quick day trade, right? So basically I leave capital around to do that if I need to do it. So that's the whole thought process. It really isn't different from whatever like I'm overnighting something. It's just I'm going to be swinging. This isn't like, PJ overnighting something thinking there's going to be a continuation on his day trade. He's a day trader, by heart. So
Thank you.
All right, I'm gonna try this again. Hopefully, my mic's actually on this time. My mic was on for the stream, but not on Discord. I'm like, hey guys, wait, and you guys just kept going. So now I look like an idiot. But anyway, the question from the previous gentleman that had the mic issues, I'm gonna just read it out for you. It says, how does Brady determine the time to achieve his price target? And then how long will it take to achieve? Wait, I guess that's the same question. So yeah, how do you determine the time frame that you're going to look for to for that end goal, or at least that price target that you have?
yeah, I mean the thing is like the price targets are just so we know how far it's gonna go, right? Like we did an example on Virgin Galactic where the 161.8 fib. So usually that happens on a cult ticker, like it has to be a cult ticker, it has to have certain attributes. It'll happen within 3 months, 2 months typically after consolidation period. It'll just hit my 161.8% fib. And so that's just me kind of recognizing certain stuff. But it's just in the back of my mind, me knowing that it can get that price, right? But realistically, I'm going to be trading around the core, right, to compound my gains before it does that. In terms of everything else, right, like if you want to look, hey, how long is it going to take to go a little further? Look at the hourly timeframes. I use the hourly timeframes to go, kind of a couple of days. Like, what does the hourly tell you? The hourly could basically tell you that, hey, it has moved, it has room to go from 25 to 30, but 30 is a key resistance area. There's a high volume node there. There's a supply zone there. Whatever you use. So it's likely to stop there, right? It's not like something's going to go from 25 to 60 right away. It's going to hit these resistance areas and it's going to fall down at least once, right, before it can kind of do further things. So that's the
Awesome.
general gist.
All right, we'll take one last question and then we're gonna end it there.
Okay, did I lose you?
Oh no, I just having mic issues because I'm dumb. We got one more question and then we'll wrap it up here.
Sounds good.
Hey Brady. Quick question. For newer traders, I'm having trouble focusing on what I should actually, study or like really focus on. Do you have any direction for like newer guys?
Yeah, so I just said it in the beginning of the cast, right? So volume price analysis, no matter what style you adapt, if you can get really good at that, it'll build a really good foundation. You won't need any indicators, you won't need anything. If you
Okay.
can analyze volume and price, right? And I've if you just look it up in my channel, I have the two ebooks. There's another video that I like. And then read the Japanese Candlesticks by Steve Neeson. So it's the two Anna Coling books. It's Japanese Candlesticks by Steve Neeson, and there's a volume video also in my education channel. They're all kind of grouped together. It'll be very kind of easy to find. So.
Okay. Awesome. Thank you.
Awesome, guys. Thank you guys so much for all your questions. We're going to close it up here on the Q&A. I really hope that helped you guys learn a ton. Like I said, Brady is totally like opposite what I am. I'm a momentum trader, day trader. He is a swing trader. He's got all this Fibonacci going on, and he's obviously succeeding in a different kind of way. All this proves is that there is so many different ways that you guys can go on your path to success, and you can always make it there. So don't, if you don't like the momentum trading, day trading, and that's not for you, and maybe you can't because you work a full-time job, I feel like Brady's kind of style might be right for you. So Brady, if you would kind of shout out maybe your Twitter, where they can find more information to learn from you and your education.
Yeah, absolutely. So, the Atlas Discord under Brady's Dash Education has kind of all that. The beginning of the channel actually has some of the older indicators and stuff that I use, which I still found success with, but I would focus on kind of the later stuff that I've posted. And so, volume price analysis, candles, supply demand zones. Shout out to kind of PJ for some of this material, and those are the things. And you can look through the webinars. I have 7 webinars that cover kind of Fibonacci as well, and some other tools that worked. In terms of Twitter, It's Brady underscore Atlas. Don't get fooled by any imposters. So pretty easy, like Brady, like Tom Brady, and then Atlas, like Atlas, and there's an underscore. But, and so yeah. The other thing too is on Twitter, I'll do hashtag trading tips. It's something that Ripster also kind of taught me. Hashtag trading tips has all the kind of write-ups too on like materials and just edu posts I have. So you can kind of look through both. And he's a great follow as well, Ripster. Obviously, everybody knows him. So
Awesome. Thank you so much for coming on to the stream, man. This is great content. I'm super excited to finally get to hear your voice, talk to you, and really get kind of your perspective of where you came from and what you're doing right now. And again, congratulations on finally taking it full time. Super excited to see more information coming from you, and can't wait to have you back on the stream in the future. All right, man. So thanks a lot.
yeah, thank you, Rocket. Appreciate you having me. Thanks, everyone.
All right, there you go. So that was fun. I hope you guys enjoyed it. I hope the information was there for you. It's really hard for me to engage 100% with that because it's like I'm a totally different trader. But I hope for the people who did come to check it out that are trading dailies or longer terms and things like that. Do you guys think it helped you? If you guys could give me a 1 in the chat, if you guys think that this was very helpful for you. Again, there's so many different traders out there that have different styles and different ways of making money and changing their own lives where they don't have to work a full-time job. There's a lot of Fibonacci talk there. There's there's a lot of VPA, which is volume price analysis. So if anything, if you guys learned anything, you got to go read that book, and it'll help you a lot. Doesn't determine where you're going to end up in the future. It's just going to help you really find yourself to become the better trader. And I haven't read the book myself, so it looks like I'm going to have to go pick it up because, again, I learned everything that I know pretty much from the guys in the chat room like Brady, and learned it a lot from just the time that I put in every single day, grinding these charts and grinding the time and watching level 2, time and sells, looking at the PRs. Literally when I started trading, I was looking at like the PRs so in detail, it was ridiculous. I was like, okay, so it had this news, that's a patent. What kind of patent was it? Was it this, was it that? Okay, should I expect patent news to go 50%, 60%, 100%? And then, I was really going too far in detail for my style of trading, so I just adjusted that. I took a step back, said, you know what? As long as it has some kind of news and there's some kind of volume there, then I like to trade it. That's more my style. Some of these guys like Brady like to dig deeper, like to go to, have all their friends have a group connection and can kind of bounce things off each other, look at filings, and just come up with more of a brainstorming session that gives them more confirmation bias where they should take these trades or not, right? So whoever you are in the chat, wherever you might be in your trading career, know that, where you are right now might not be where you will be in the future. So I'm super excited to just see you guys kind of flourish on your own here. It's funny that RCB hasn't noticed what? Oh, the book? Yeah, VPA. I need to go read it, It's pretty crazy that I haven't. I know he talks about it a lot. People in my chat room are like, hey, man, have you read VPA? VPA is the best book ever. Like, you should really go get it. Like, I don't know how you don't know or how you're succeeding without reading such a book. So, it's pretty crazy to think about. Let's play some music, and we'll head out for the stream. We'll cut off this so everyone can kind of watch this back later tonight. If you want to rewatch the stream, maybe you didn't understand something the first time, maybe the second time it'll click for you. Go for it. Appreciate all the love and support, all the subs, and just, literally 1,200 plus people being here in the afternoon. That's a record. So kudos to all you guys who came to the chat. That is the biggest the stream has ever been in the afternoon, all right? You guys can hear the music, or are we good? We can see clearly.